the markets are starting to show some cracks that I wanted to talk about in this video today. We're going to be looking at mainly the QQQ or the Nasdaq 100 ETF, and I want to show you some similarities that I'm seeing before we had other corrections over the last few years. So looking at the chart here, we can first just understand that we have the RSI up here, we have the Williams percentage range right here, we have my matrix indicator here, and my temperature indicator here. And this indicator right here is our bull and bear trend. Bearish is red, bullish is teal. So what we really need to be looking at here is that we are already 5% off the all-time highs on the Nasdaq 100. But the issue that I'm seeing is on the Williams percentage range. We need to understand about the Williams percentage range and the strategy that I've created with it. Red barrier is meaning that you are rejecting off of it. You're rejecting out the green and red barrier essentially. And it, like a pendulum, you swing from side to side, one end of the spectrum to the other. And when you get up to the red barrier, you create what I call Williams consolidation boxes, these tight consolidations of the Williams percentage indicator. And as long as you're doing that, the market is going higher. As long as you're doing that, the market's going higher. And as long as you're in these boxes up here towards the red barrier, the market is going higher. But whenever you break out of these boxes, the market typically falls lower. Sometimes fake outs happen, like we saw in Tariff-Geddon and the Iran war right here. And then sometimes it's just a straight line down, like we saw in previous years, like 2024 and both in 2024. So let me point you over here, right? And let me show you an example of this. So we had a Williams consolidation box here. We ran up, we had a bull trigger, we had a bull trend, and then we broke down out of that box, started moving down, had one last rally up where they faked you out here, and then they rug pulled you all the way down here during Tariff-Geddon. Okay? That's one example. Another example would be after Tariff-Geddon, they sent the markets again. They bought them down here. We got a bull trigger. We got a flip from bear trend to bull trend, and we went on this massive rally while doing so, staying in the Williams consolidation box. But we broke down out of the Williams consolidation box in, I believe it was November of 2025. They sent it a little bit higher, not quite all-time highs, just a little bit under it, chopped you back up, acted like nothing was wrong, everything was copacetic, and then they rug pulled you again, and you fell down to the green barrier. So what do we know? We know that we build Williams consolidation boxes. When they're bullish, we're running higher. But then when we break out of them, we need to be very, very cautious as traders. That way we don't get just massively rug pulled. And as investors, we need to be cautious and make sure we have money to be buying as much as we possibly can down here at the green barrier. Buying at the green barrier when the overall indexes are down low and beaten up is the best time to be buying. So that was one scenario in 2025, another scenario in 2026 this year, and now we're seeing it again because we had this massive rally since 2025 or since the beginning of this year when we had this fall from grace. We had this correction in the Qs. We've rallied very hard since, and now we've just been chopping sideways. And while we have been doing that, Williams consolidation box has been formed and moving higher. But now you are breaking down out of the Williams consolidation box. Now you have divergence on the RSI while you're chopping sideways. Your bull trigger is still intact. Your bull trend is still intact, but we're starting to see signs and cracks in the system. Our matrix indicator is starting to decelerate on the histogram. And our temperature is starting to go from teal, which is super bullish, to, let's call it orange, to where with orange, it's starting to say, hey, things are drying up a little bit. Does this mean that we can't just reverse here and continue higher? No, it doesn't mean that we can't. We definitely can, and this Williams consolidation box could get pulled down more to here if we were to have a strong bounce here, and we can easily continue higher. But again, this video isn't about calling a crash or calling a correction. This video is about, hey, I'm starting to see some warning signs here. And this is exactly what I told my investing or my trading community and investing community in our High Five Collective Discord. I told them, hey, I'm going to move us from clear skies where everything's fine. Like you need to be trading maximum capital. You need maximum capital invested in the stock market into windy where we're going to be a little bit more cautious with our trades. We're not going to go super crazy with our trades. We're going to pull back some. And then with investing, we're going to be raising some cash and being a little bit more mindful. That way we can have some cash, 10, 15, 20% to be a big buyer if we do fall down to the green barrier, because we want to be big buyers down here, not up here. So that is what I'm seeing right now. If, let's just say that we are on a crash course for the green barrier. If we are on a crash course for the green barrier, the number one target that I have here is going to be the 2025 highs on the QQQ, which range from 620 to about 640. And the funny thing is, our newest indicator that we've added to our matrix trading strategy is our matrix target indicator. And it gives you an invalidation point and it gives you your targets. You get 1, 2, 3 targets, right? So with this, it kind of tells you, hey, if the floodgates were to open, we were to come down here to the green barrier, the matrix just flips over and crosses bearish, and the whole trend, the whole momentum of this market just comes crashing down, then we're looking for a move first to about 630 to 656, second to 603 to 626, and finally a move down to 573 to 600. We can bounce at any one of these points, by the way. It doesn't mean we have to get down here. It's just giving you targets based on history. This just says if we're going bearish now, this is where we could fall based on the previous times that the matrix has flipped over, the Williams percentage has flipped over, and how long it took to get down to the green barrier, so on and so forth. So that's what I'm seeing. I just wanted to put this out there, give you guys a little bit of a heads up, a little bit of a warning. Again, we could just bounce here, but we've been stuck in this range, guys, since about, what is that? Since May. Since May, we've been stuck basically between 700 and 750. And the funny thing is when you look at the options market, you're going to see that in July, now July is one of the most bullish months if we jump over here to valuesnapshot.io. 1.2% is the average seasonality move on the S&P 500. You get Bitcoin, semiconductors, gold miners, cloud computing, and software absolutely running while the more defensive start, taking a pullback. So this is a great month for semis and, technology and everything to be running. And I do believe we're going to get these pops, but I don't think it's going to be easy. You see this on the daily chart. We've already been up, down, and around. Like I said, between 700 and 750. And based on the options market that I'm seeing a potential rally up to 725 and then a move down to 684 in, say, August, right? And then I'm seeing a move up, down, and then back up to 740 in this month of July. So we will get a nice little rally up here to 740, not quite be getting over all-time highs. And then we see a big move down in August and September. And if we look at the options market, you're going to see exactly how this plays out. Because if we look up here, you can see these yellow volts. And a volt is essentially a magnet. For each one of these days, these are the biggest volts or magnet pulling price towards it for each of these days. And what I'm really seeing here is that next week, say Monday, it's pulling us to 722. We're currently at 710. Then it's dropping us down to about 685 to 705, right? And then it's pumping us way higher to about 740 2 weeks from now. And then towards the end of July, Then we start seeing some trouble. Then we start seeing 694, 700, 680, 700 in August and September. Basically, and I drew it out right here, like I said, running up, having a deep pullback, and then having our July bullishness, right? And then seeing a more severe, possibly basically a correction or a pullback on the QQQ lower. So that's what I'm really seeing here, guys. Again, I'm not a prophet. It's very hard to predict this stuff. This is just what I could see happen based on what I'm seeing in the options market and based on what I'm seeing on the charts. Again, if we bounce here, say we cross above 755, we cross above 755, cool, we're good. We're back and resuming up on the bull trend and the bullish move higher for the rest of the year. But it does feel like that July is going to be a whipsaw action. Then once everybody's exhausted, you get the rally, and then the rally's actually a trap that brings you down lower potentially into midterm elections, which are typically kind of bearish. So just what I'm seeing, guys. We're just sitting here. We're just doing some technical analysis. None of this is financial advice. I'm just going to be weary because we can't predict this stuff. I'm just going to be weary and just follow what my charts are telling me, because I'm not sitting here, predicting. I'm sitting here just saying, hey, these are some scenarios, because it's all about scenarios and probabilities. These are some scenarios, these are some probabilities that I'm seeing. Basically we break above 755, we're good to go. I could see a nice little chunk of move up to 740 at least here in July. But again, it could be more choppiness that we've been seeing already dating back to May. So we'll see what happens, guys. I'll keep you guys updated week by week. Make sure you guys are in the know about what is going on in this market and what the options market is saying. Voltaggio is a great dealer spread. If you want access to this, I got 20% off link down below in the comments and in the bio. So if you want access to that, you can join up there. If you want to access any of our indicators that we have, get our trade alerts, be part of our small account options challenge right now. That's actually up about 80% in the last 3 months. We've been crushing it. You can do all of that. Come on over to High Five Collective on WAP. Again, link down in the bio. You can join any one of our tiers, investing, trading, or platinum, where you get everything, including all the matrix strategy, trading strategy indicators. So that's what I'm seeing in the markets, guys. Nothing's for sure yet. Like I said, still holding bull trigger, still holding the bullish trend higher. But we are seeing some cracks that I've seen before that have led to a correction. So we'll see if Tom Lee's right, or we'll see if he's wrong again. Appreciate you guys tuning in. Let me know down in the comments below what you think is going to happen and if you're raising any cash at this time. Appreciate you all. Catch you guys in the next one.